Wait, what? I can do that? This is Eric Bell with Wait, What? Financial matters that matter for business and the people that own them. This topic today is going to be corporate credit. I have with me today Dr. Stephanie Ardrey, president of Blue Diamond Capital. Stephanie is an entrepreneur, educator, and executive. Stephanie has trained thousands of entrepreneurs nationally as an adjunct professor teaching in the Management and Legal Training Department at the University of California, Los Angeles, or UCLA, Business and Economic Department at California State University, Los Angeles, and the Business Management Department at the Fashion Institute of Design and Merchandising, also known as FITM. Stephanie has directed multi-billion-dollar portfolios of commercial real estate development projects, luxury, multi-use, and retail commercial. Some of her past clients are the California Department of Health Services, PetSmart, Chart House Restaurants, Six Flags, Magic Mountain, Phoenix Lottery, Texas Utilities, Bank of America, Epson America, House of Seagram, Macy's of California, the Claremont Resort Hotel, Hyatt Regency Hotel, Park Oakland Hotel, Dole Foods, Golden State Warriors, Calcan, M&M or Mars Foods, and a bunch of others. She has a doctorate degree in business administration with a concentration in international business. She also has her master's. Stephanie also holds a Lean Six Sigma Black Belt certification as a project management professional and California licensed real estate broker. Stephanie, how are you today?
Man, I feel like I'm about 70 years old after that description.
I was going to say, you got a lot there. A PhD.
Talk about starting when you're in preschool and building your experience. That's what I feel like.
Yeah, we've known each other for a while, Stephanie. As you know, I majored in everything in college but the curriculum, so hats off to you to having a PhD.
Well, then that means you probably did it a little bit like my grandmother said. She told me that I was supposed to keep one eye on the books and one eye on the boys. Instead, I was all in on the books. So yeah. Well, you made up for the fun that I should have had.
That's right. That's right. Hey, I want to just talk about corporate credit and get your input. And I had some specific questions here that I think the audience would appreciate. First of all, I want to know, what is corporate credit?
Excellent. Thanks for giving me the opportunity to talk about this. I find this is one of those areas that's so important for businesses, and so few businesses really even understand. So I think this is exciting. So basically what corporate credit is credit that's in the name of the business. And of course you need to have a legal entity. So either you have an LLC or you have a corporation, but some type of legal entity that you've established in order to conduct business. And then you begin to create credit in the name of that particular entity.
So that's a lot different than having a personal credit account. Can you explain the difference?
Yeah, absolutely. So a lot of times, most entrepreneurs, when they start their business, they don't have financials yet. Typically, they haven't generated revenues yet. So their first inclination is to think of, well, let me establish accounts, but they're using their own name as the source for those particular accounts. And in the beginning, it may seem okay, but what happens is your personal credit has certain restrictions on how you use it, and the needs of your business are going to usually increase. So you need to use your credit quite a bit. And in your personal credit, that becomes a negative, because typically when you're building personal credit, your score is based on using, no more than 30% of your available credit. And so typically when you look at the credit lines you have, most people have been encouraged to be conservative on building personal credit in the first place. So then when they're trying to use the credit for all of the needs of their businesses, they find themselves at a point where their personal credit begins to become negative. Whereas if they were building this credit on their entity would not have those same restrictions. And often the credit lines are larger to start with.
Wow. So for those entrepreneurs who are using all their personal credit cards, that's a no-no.
It's a no-no, because also the other thing is at some point you want to really separate your business from your personal finances as well.
Wow. So how long does it take to build corporate credit? Can it happen overnight, or how do you do that?
So it doesn't necessarily happen overnight. It's like building anything else. The process can take as few as 90 days. And then once you start the process of building, you're going to continue building, because what happens is, as you're spending money on your business, I was speaking to a client yesterday, and for example, she says, "Oh, I've added these credit lines to my Dun and Bradstreet, but my computer broke, and I went to Best Buy and they gave me a line of credit on my personal credit." And I said, "Well, why didn't you ask them for a corporate line against your corporation?" And she says, "Oh, I never even thought about that."
Wow.
It's like, well, yeah, if you're buying a computer for your business, then you should be buying it under your corporation.
So when should someone start building corporate credit? Do you start immediately, or do you wait till you're in business for a year or two, or when should you start?
As soon as you file your entity and you receive your EIN, your taxpayer ID number that's associated with that entity, that's when you want to begin. However, I caution you, you want to make sure that you've got the foundational, the credibility points in order. So I would say as soon as you file your entity and you set up the credibility points about your business, then that's when you want to begin.
Okay. So does it matter what industry you're in?
No, the industries are irrespective. As long as you're in a business that's conducting business, you could be, doing B2C, business to consumer, B2B, business to institution, B2G, business to governments, whatever type of business that you're operating, you're doing business. You're going to be doing business with someone, some organization, some entity, some individuals. So as soon as you set up that business, and the credibility points that I'm talking about have to do with how your business is viewed on paper. So once you create that entity, it's things like your business location and address, the email address, the telephone. All of those things begin to establish the credibility of the business. And so you set up a Dun & Bradstreet profile, and you're assigned a DUNS number that correlates with this new entity. And that's when you begin to start the process of building corporate credit.
So you said something about address. If someone's using a P.O. box for their business, is that okay?
No, actually, so often people make the mistake. They use a P.O. box, or they sign up for a mailbox, etc., or a UPS address. And what they don't realize is, again, the name of the game is to build corporate credit and to minimize the need to serve as a corporate guarantor, personal guarantor for that credit. So what enables you to establish that credit based on the credibility of the business is the business needs to appear and needs to be a legitimate organization. And so usually, when you go to set up, if you were Xerox or any other major corporation, you're not going to be operating from a P.O. box or from a mailboxes, etc. You're going to have an office someplace, even if it's a small office. It doesn't say what size office you need to have, but you need to have an address in a commercial building where your business is set up and operating so that your business establishes itself as a credible organization. Because creditors are able to do a reverse address, and they'll do that oftentimes to determine if this is a legitimate address or if it's just a mailbox type scenario. And so when they see that, then they'll red flag the account, meaning that they want to investigate further before they determine if this is a legitimate location.
So having a physical address adds to the legitimacy of your business.
Absolutely. Mm-hmm.
Let me ask you about banking. So let's say I have a personal bank account at Wells Fargo. Why can't I just go there and get a credit line?
So you can, but that's a retail-facing organization. What I encourage businesses, entrepreneurs to do is you want to be able to establish a banking relationship with banks that are focused on businesses, right? Oftentimes when you work with a business-oriented bank, they're understanding what businesses endure as it relates to going through business, and you have a more personal relationship. So you're able to establish that relationship with the the tellers, the executive VP of that particular branch. And a lot of times they'll have different programs. It's also good to find out on the front end before you open up the account if the bank lends to companies within your sector. Because it's no benefit for you to build an account, a banking relationship, only to find out that no matter how long or well established the relationship is, they're not even going to lend to your sector because perhaps their portfolio is overfilled in that particular sector. So it's about just understanding, what are the sectors that they're lending to? And then because sometimes banks have a threshold of how much they can allocate to a particular sector, you want to have more than one banking relationship. So I always say, think of it kind of like, you remember the commercial way back when they were talking about my Fave 5? I always say you want to look to have a minimum of 3 to 5 different banking relationships. So different relationships help you with different elements of your business. So you may have an operational account with one particular bank. You may have another bank that you allow to hold your assets for longer term. And then you may have another, maybe if you're doing business and you need to have a national bank or you need to have a global banking relationship, you look for banks that are able to fulfill those requirements as you plan out how your business is going to grow.
So when I think about banks, business banks, that's the smaller community bank that's maybe in California or Orange County, for example?
Yes, that's exactly what I'm talking about. Because oftentimes those banks, you're going to get a little bit more insight. With the banks that I have relationships with, I can call up one of my colleagues and say, hey, I'm going to need XYZ type of capital. Tell me what programs you currently have available. Kind of give me, the Cliff Notes version of what my business should look like before I apply for that particular financing.
Okay, so the retail outlets like Wells Fargo, Chase, B of A, they're more for the individual consumer versus the business.
Yes, they'll all say that they have business accounts, but oftentimes what you find is they have very few business bankers. And because of that, they tend to lack true business knowledge. Now, what a Chase or Wells Fargo or these other retail-oriented banks will do is they look to see if you own property. So the dirty little secret sometimes is if you have a house, they're looking to see, well, how much equity do you have in your house? And then let's use your house and we'll give you a HELOC. Or we'll use your house collateral and sure we'll give you something that they're telling you is a solution for your business. But if anything went south, what you find out is, oh my goodness, they were just using my house. They weren't basing it on my business, the viability of my business, the viability of my sector or industry, or any of those things. And they're not even reporting it to the business credit repository. So it's not helping me to build business credit. They're reporting it on your personal credit. Oh. So at some point, it's going to become restrictive. And that's also a problem oftentimes with what the Small Business Administration does. You would think that a business administration is focused on helping businesses to establish themselves, but unfortunately, they focus on the same element. An SBA loan doesn't report to a business repository. That's a real problem in the system. So you as an entrepreneur, you need to understand more about your financial needs, unfortunately, than some of the people you're probably talking to. They're not experts in understanding your financial needs.
So, Stephanie, if I understand you right, you want to get away from using your personal assets to secure business lines of credit or business loans.
That's exactly what I'm saying is yes.
Okay.
The more that your business can begin to stand on its own, the better. What about when you want to, if you want to expand or if you want to go through a merger and acquisition, you want to sell your business. You don't want your business's value only to be associated with you as an individual. You want that business to be able to stand on its own.
Okay, that makes sense to me. I'm going to probably beat this one to death. You said don't use a P.O. box. What about using your home address as your business address?
Same thing. Those same lenders that use the software, they tend to check the address. And if it pops up as a residential address, then it's kind of the same thing. Oh my goodness, are you really a legitimate business? Or, what is it that you're doing? Because typically many companies, you may start at home, but hopefully you're going to move from home in order to really grow and expand your business. And also the second reason for that is a lot of times if you have your home address, your entity, all of those things become public information. So you don't want people knowing to show up at your house. And also, if for some reason there was some hiccup in your business, you don't want to have your house identified as a place to go to try to leverage or place a lien or put your house into jeopardy because of anything pertaining to your business. So there's just several reasons that using your home address is not the best address.
I see a lot of guys, and women, they have their cell phone number on their business card. Is that okay? I mean, we're all cell phone people nowadays. I'm just wondering, is that a good thing or is that a bad thing?
It's a bad thing because, again, another test that lenders will use is the test of if the business is, they'll do a test to see the number. And so they'll reverse check the number. And if it comes up that it's a cell phone, then that also looks like the business lacks credibility, as well as the cell phones are not listed in directory assistance.
So you want to be in the directory, some type of phone directory?
Yes. So a lot of times potential creditors will check 411 directory assistance to see if your business number comes up and if that number correlates to both your business name and a physical business address. So it's important that, again, all of the information about your company is consistent in every form. So your business name, your incorporation or your LLC documents must list the same set of information, your business number, all of those things. And how you're able to do that is you can secure a business number in the name of your organization. And if you want to have that number forwarded to your cell phone, you can forward that number to your cell phone. But the number, if someone were to check the number will show that it's registered to your organization.
Okay. That's a big tip. What about email addresses? A lot of people, they just get a new email address through Gmail or one of the email services. Is that important to have a specific email address for your business?
Absolutely. Again, it's about credibility. Think about it. When you go to Staples, when you go to Home Depot, when you call up whatever wealth manager you're using, they're not using Gmail or Yahoo as their email accounts. Every organization that you've gone to work for, they have a company email address. Why would you treat your business any different?
Wow, that's true. I was wondering, when you have established corporate credit, is there any limit to how many accounts you can have?
No, it's actually one of the best kept secrets. You would think of, for example, like Walmart. Walmart is a publicly traded company. So one of the benefits of being a publicly traded company is you have access to capital. Walmart has over 513 trade lines. Because using the business credit allows you to stretch your cash flow. It allows you, sometimes your company is offered corporate credit lines that have 0% interest. That's a huge benefit for an organization to have 0% interest. That's basically free money.
So wait, if I understand you right, the big corporations like Google, Walmart, the ones that we think have cash flow here and there coming out their butts, for lack of another word, they have credit lines.
Yes, they have trade lines. They're using corporate credit as well.
Wow. You would never think that. You would think they're just using their own cash flow.
No, I always tell companies it's more beneficial to use additional sources because think about it. Even for a large company, if you have accounts receivables, your accounts receivables, people don't always pay on time. So do you want to limit your ability to execute your business plans based on when you receive your accounts receivables? That creates a lot of issue in being able to execute. Say you're looking to hire new talent or you have the goal of adding new marketing campaigns, but you're waiting until a certain amount of your clients pay their bills before you can execute, and then you have a certain amount of uncertainty in your plans. No, you want to have the resources available so that you can continue to build your business irrespective of how quickly your clients might be paying their bills.
Back to account usage, on the personal side, you said a little bit earlier that, you never want to be at the top of your credit line. How does that work with corporate credit?
It's just the opposite. There's no issue about that. You can use the maximum amount of your lines. Oftentimes, that encourages the creditor to increase your line. And typically what happens with corporate credit, which is really amazing, is once you've begun to set up those accounts properly, they're reporting to Dun & Bradstreet and Experian, Equifax, the business repositories. What happens a lot of times is those creditors will evaluate the accounts, and if the accounts have been maintained very well, they'll put them on an automatic limit increase so that every 6 months to every 12 months, those limits are automatically increasing. There's people that have built millions of dollars in credit lines just by allowing the proper management and the accounts to automatically increase.
Okay. Let me ask you this. Does the business name matter? I mean, can you just name your business anything, or should it be, how should you think about your business name when you're coming up with a business name in regards to corporate credit?
Absolutely. That's a very important one too. I always say, think about a business that if you were to sell it, that again, what is your ultimate exit strategy? Now, if you're creating a company that's a lifestyle business that's dependent upon you, where you have, for example, professional entities, like if I was a dentist or I'm an attorney, in those cases, oftentimes you're using your name as part of the naming process. But in most other industries, it's important to create a brand name that you're comfortable with using, but also if you're in a particular industry that can raise an additional red flag, or if you say an additional level of scrutiny. I'll give you an example. My commercial brokerage is called Blue Diamond Capital. Capital is one of those words that sometimes creditors are concerned about. Does that mean that she's using our resources as capital for other clients? Is she betting our money in another way? So for our corporate credit, our corporation is Blue Diamond Group. And so Blue Diamond Group does not have capital in the name.
Okay.
And so that allows us to avoid that concern about capital.
Okay. I was wondering, is corporate credit, or are there different types of corporate credit?
It's corporate credit, but there's different categories of credit. So for example, when you first start building credit, you usually start with building vendor credit. And so vendor credit could be even when you're doing business to business with other professionals. So your CPA, other vendors that are offering you maybe net 30, net 60-day terms, not really revolving accounts, but those vendor accounts that you're paying pretty quickly after it is that you've procured either a service or product. The next category become those, what we call the store or revolving accounts. Those are accounts that allow you to carry a balance and make payments towards those balances over whatever period of time you elect. The next category we would call fleet accounts. So those include your corporate vehicles. So the fuel for those vehicles, it could be purchasing or leasing company vehicles. It also could be to cover maintenance of any of the corporation's vehicles. And so those would fall all within the fleet account. And then the last bucket is what we call cash accounts. And so that's where you get those corporate MasterCard or Visa accounts that have hundreds of thousands of dollars as a limit. They may be initially 0% interest for the first year. Those types of accounts are the accounts that fall into the cash bucket. You may get a fixed line of credit that allows you to draw down on the line as you need to accomplish, again, your business objectives. So they're all considered corporate credit, because they're all reporting to Dun & Bradstreet and the business repositories, and they're all against the corporation.
So 4 types of credit: the vendor credit, revolving credit, fleet accounts, and cash accounts are the 4 different types.
Yes.
Would a small business, well, not a small business, but would a business bank be well-versed in all 4, or would you have to go to several different banks to get those types of credit?
Correct. So what I usually say is if someone is coming to me and they're saying, hey, we need to raise $250,000. So then I ask them, so if I gave you $250,000, how do you plan to allocate that $250,000? And so we work on a use of funds summary. And from that summary, well, I'm going to buy equipment over here. I need to get supplies over there. I need so once I look through that use of funds, then I begin to pull out items that are easily financed through another mechanism. And then I leave behind the items where you only really need cash in order to cover them. So if I need to make payroll, well, I need cash to be able to make payroll. But if I need to provide equipment or computers, then typically there are ways to finance the equipment or computers using equipment financing. So I don't want to use my line of credit for that when I can carve that out and finance it in a different way.
Okay. Stephanie, I've asked you a lot of questions about corporate credit. Is there any other benefits to corporate credit that you haven't spoken on in terms of developing corporate credit?
Well, I think the major benefit is that, one, it demonstrates credibility of your firm. It allows you to diversify your capital stack. Ultimately, you get to a place where you're not serving as a personal guarantor. So that's the ultimate. And then it's giving you the leverage to find, the name of the game is to set the course for our business and find the resources, right? So if you're growing, your business is always going to be looking for capital. So as a CEO, the goal is to find those resources that cost you the least amount of money and then leave the pain with the business. We hope that everyone starts their business and they expect to be hugely successful. But we know the economies fluctuate. Sometimes we're not successful. So if we run into a situation where we need to reorganize or unfortunately dissolve the corporation, you would like for all the assets and liabilities to be captured with that entity.
As opposed to yourself. Okay. And Stephanie, I know you're well versed in this subject. You help people around the country on this. You're available if someone needs to get hold of you?
Absolutely.
Okay. Well, that's all I got for you today, Stephanie. You can always get hold of Dr. Stephanie Ardrey through me at eb@wait-what.biz. Thanks for joining us, Stephanie.
Thanks for having me.
Be sure to subscribe and listen to next week's episode on R&D tax credits or research and development tax credits with David Greenberg. The thing I didn't know about this is that 95% of companies that qualify for these federal tax credits are not taking advantage of them. So only 5% of companies are. So tune in next week.